So I asked people before you came into the room, I said, look, if you won $1 million lottery, and part of the stipulation on the winning was you have 5 hours, you have to pick one stock, and you have to keep that one stock for 10 years. Otherwise, we're not going to give you the $1 million. What stock would you invest in?
Our conviction is very high that $180, if you do hold it, don't trade it, will scale to $1,500 in our base case. It's actually a little north of that now. So almost tenfold in 5 years. Why? Because electric vehicles have entered the sweet spot of their S-curve, and Tesla is leading the charge, so to speak.
That was good. I just got the pun. Sorry.
So just the electric vehicle part of the story, that's 500 of the 1,500. In order to get that other 1,000, you have to believe, as we do, that Tesla is going to be in the lead, in the pole position to become the autonomous taxi platform, at least in the United States.
In this video, worlds collide as Cathie Wood talks to Grant Cardone, explaining that if she was forced to buy just one stock to hold for an entire decade, obviously, that stock would be Tesla, and the primary reason is on the back of autonomy, which is the subject of today's video. We're going to be looking at the Ark Invest Big Ideas 2023 with a specific focus on autonomy, the multi-trillion-dollar opportunity that Tesla is on the cusp of unlocking. First, we'll have a quick listen to this clip, then we'll run through the Big Ideas 2023 report with the focus on autonomy, until Tesla Bot really hits its stride in the 2030s and beyond. Understanding the potential implications of Tesla and other companies eventually solving autonomy is the most important thing you can do as an investor in the public markets, in my opinion. This is, after all, real-world AI, and if you haven't noticed, there seems to be a little bit of an explosion in AI capabilities lately. That's putting it lightly. Whether or not you agree with Ark Invest's assumptions around autonomy, electric vehicles, and most important of all, artificial intelligence, is up to you. But to ignore their predictions and forecasts, I think, could be a fatal mistake. Almost as fatal a mistake as not picking up your Athletic Greens AG1 with the link in the pinned comment, or heading to athleticgreens.com/SMR. Seriously though, don't say I didn't warn you.
So I asked people before you came into the room, I said, look, if you won $1 million lottery, and part of the stipulation on the winning was you have 5 hours, you have to pick one stock, and you have to keep that one stock for 10 years. Otherwise, we're not going to give you the $1 million. What stock would you invest in?
Well, especially because of how much it's been pummeled recently, and we're known for this. I don't think it'll surprise if any of your listeners have heard of Ark. They've heard of Tesla, and I think Tesla. So to give you a sense of that, I think Tesla hit $180 today. We have put out on our website our Tesla model, and you can manipulate it if you'd like to see how we get to these numbers. But that $180, we believe, will in 5 years. Now, this is our research, and of course we could be wrong for compliance reasons. I have to say that, but our conviction is very high that $180, if you do hold it, don't trade it, will scale to $1,500 in our base case. It's actually a little north of that now, so almost tenfold in 5 years. Why? Because electric vehicles have entered the sweet spot of their S-curve, and Tesla is leading the charge, so to speak. And just
that was good. I just got the pun. Sorry.
So just to get to that $500 price target, I mean, to get to the electric vehicle part of the story, that's 500 of the 1,500. In order to get that other 1,000, you have to believe, as we do increasingly, that we are going to be, that Tesla is going to be in the lead, in the pole position to become the autonomous taxi platform, at least in the United States. There are not going to be many winners here.
So just for the record, I am currently buying just one stock to hold for at least the next 10 years, and amazingly it turns out to be Tesla stock. I'm also not trading it, I'm just buying it. And much like Ark Invest and Cathie Wood, a significant portion of the reason I'm buying Tesla stock today isn't the electric vehicle business. Although they've already won there, they've disrupted the entire automotive industry, they have an unassailable lead, they're embarrassing, making a mockery of the traditional automotive industry and everyone attempting to produce electric vehicles. I'm already calling it a decade early. They've won the decade. In fact, I've been saying this since 2019. But the big driver of Tesla's future growth in terms of earnings and ultimately their valuation throughout the rest of this decade, I believe, will be autonomy. Now, don't get me wrong. The vehicle business itself is going to be a huge money printer. It's just compared to the scale of the opportunity that autonomy represents. Tesla's incredibly profitable money printing automotive business is a speck.
And I don't hear you really talking about the electric aspect. I hear you talking about the autonomous. Are you saying that the Chevys and the Mercedes and the Audis that are coming on with electric, that Tesla's advantage is going to be the automation, or am I getting that wrong?
I think it's both. I think they're electric vehicles. If you want, for a given price, if you want the same performance as Tesla in terms of range, same range and same performance, another car company is probably going to have to lose money if they price their cars at Tesla's prices. And as you've probably heard recently, Tesla is starting to use that learning curve and is starting to drive down prices again. It's going to be very difficult for other companies to keep up. So we do think they've got a very strong position on the electric vehicle side. But the autonomous platform, it will be more of a software as a service like model compared to an automotive model for the electric vehicle. So automotive gross margins are in the 25 to 30% range. The autonomous gross margins could be as high as 80%.
So I think what Cathie Wood is trying to convey there is that once solved, autonomy will be the money printer of all money printers. And that is what we're going to look at now. We're in the Ark Invest Big Ideas 2023 report. Autonomous ride hail, scaling toward widespread commercial adoption. Today, autonomous ride hail services delight riders across around 15 cities internationally. And in fairness, most of these are geofence, pre-mapped, HD, LiDAR. It's a start, but these are not scalable generalized solutions and should scale into widespread commercial adoption within the next 10 years. Autonomous technology should reduce the cost of mobility to around 12% the average cost of human-driven ride-hail services today. So let's take a quick pause here. What's a human-driven ride-hail service today? Uber? Lyft? Yeah. Not going to end well for these companies. Rest in fucking peace. Ark's research suggests that global autonomous ride-hail platforms will create $14 trillion, trillion with a T, not billion with a B, $1 trillion in enterprise value based on $4 trillion in revenue during the next 5 years. Did you hear that? $4 trillion in revenue in the next 5 years. This sounds absolutely fucking absurd. Many of Ark's predictions previously have sounded absolutely fucking absurd until they came to pass. Just saying. Autonomous ride hail is likely to increase access to convenient point-to-point transportation. Now, this is a stunning fact. Adjusted for inflation, the cost of owning and operating a personal car has not changed since the Model T rolled off the first assembly line nearly 100 years ago. There are reasons for this, including the fact that vehicles today have significantly more features and functions than early vehicles did. If they were like for like, it'd be a different story. But as we can see, since 1934, the inflation-adjusted cost of personal car ownership per mile remains almost unchanged. This suggests that consumers over time have been willing to spend a comparable amount of money for their personal transportation. Makes sense. However, this is where things get ridiculous. Ark estimates that autonomous taxis at scale could cost consumers as little as 25 cents per mile, spurring widespread adoption. Not everyone on Earth can afford a car. Most people would prefer one. They're more convenient, but you do pay a premium. If the cost of a personally owned vehicle per mile is around 70 cents, yet the cost of an autonomous, on-demand, super safe electric vehicle is around 25 cents per mile at scale, many consumers will abandon the idea of personal car ownership. I did that 5 years ago. I haven't owned a vehicle since. And this is going to cause a huge shift in consumer behavior. Ride hail is likely to create an $11 trillion addressable market. At 25 cents per mile, autonomous could serve a wider population than does human-driven ride-hail today. Duh. I mean, if it's cheaper, more people can afford it. In the meantime, Ark expects significant demand generation at higher price points based on the value that consumers place on their time. And I'm absolutely a perfect example of this kind of consumer. I will pay what seem to be absurd amounts of money in exchange for more of my time. No, like really. I would rather fly people to me and put them in a hotel than have to fly to them and stay in a hotel. And this is literally what I do more often than I'd like to admit. Now, this is an extreme example, but it's to illustrate the point. Every consumer puts some value on their time. And I think if you're relatively rational, this is in fairly close proportion to your overall income. It's been the better part of a decade since I cooked a meal for myself. I value my time and more importantly my mental energy far too much to be expending it buying groceries, meal planning, cooking, cleaning. I'd much rather pay for someone else to do all of those things except the eating part. And I do. It means I've got more time to do things that I enjoy. So we're looking at the ride-hail addressable market here. And this is based on cost per mile. Up the top here, in the $4.50 to $3 per mile range, we're looking at a $34 billion existing addressable market for ride-hail companies in Western markets, which charge roughly $2 to $4 per mile. You know, think of Uber, Lyft, etc. At around $1 per mile, Ark believe there is a $1 trillion addressable market just in Western markets. In blue here, a $2.4 trillion market. This, non-commuting miles in higher income countries priced around 60 cents per mile. I shave just a little bit more off that cost and that adds an additional $2.75 trillion market. This is a 5 trillion mile market opportunity based on 50 cents per mile. And finally, and an additional 20 trillion miles, a $5 trillion market opportunity for low-cost accessible autonomous travel at 25 cents per mile. Long story short, the more affordable autonomous robotaxis are, the more people who can afford to use them, and the more people will use them, therefore more miles driven. Kind of goes without saying, but these are Ark's estimates, and it's important to understand this. Many skeptics initially, the criticism, I can see it already before it's even happened. They're too expensive, bro, what the f***, man? But as robotaxis scale up, costs come down, consumers are going to massively shift their preferences. Autonomous taxis are a reality today. The first players to scale should become the market leaders. As we know, Waymo, Cruise, and just about everyone other than Tesla has a very narrow solution. These vehicles are effectively performing a party trick. Pre-map the area in super high definition, use expensive and ugly ass LiDAR to bounce a signal off objects just to make sure that nothing's moved, nothing's changed. Oh yeah, this is exactly how it was when we pre-mapped it in HD. You also have to geofence these vehicles because if they go outside their pre-mapped area, they instantly become a death machine on wheels. And while this may give the false perception of progress or leadership, and it's not to take away from these companies, it's a cool service, even if they're restricted to very small areas. But the problem is, if you have a very narrow, limited capability rather than a generalized solution, which is what Tesla's solving for, these companies are going to have a really difficult time scaling if another company does have a general solution. It's pretty simple. If you pick up a Cruise or a Waymo vehicle and just drop it outside its geofenced area, in a place that isn't HD pre-mapped, it is useless. The same is not true for a Tesla vehicle, because they're not geofencing, they're not pre-mapping in HD. The artificial intelligence in the vehicle is perceiving, planning, and acting. It encounters an intersection. It determines it's at an intersection. It recognizes the lights, the traffic flow, can I go, is it safe, etc. Any company using pre-mapping and being reliant on LiDAR and geofencing is essentially a company that's reproducing a party trick. They've got a car on rails, so to speak. As long as it's on the rails, everything's fine. But as soon as you take it off the rails, it's game f***ing over. And then of course, there's the data. Ark estimates Tesla has almost 3 million vehicles currently collecting data on roads. Xpeng about 1/10. Waymo, Cruise, Baidu, Pony, I mean, they barely register. Of interest, Ark estimates that Tesla's first robotaxi fares based on this are happening somewhere in 2024. Curiously, this aligns exactly with my own estimates that have been available in my Tesla valuation model since day one. I have the first robotaxi fares happening in 2024, obviously in the later half of the year. Things don't really start to ramp up until 25 and beyond. Now, I could be wrong, Ark could be wrong, but it's interesting that we've both landed on a similar estimate. Let me know in the comments below, when do you guys think the first Tesla robotaxi fare will take place somewhere on Earth? Based on the shift to autonomous vehicles, oil demand could decline 30% by 2030. Based on Ark's electric vehicle forecast, oil demand is peaking and could decline by 5%, or 5 million barrels per day by 2030, and 10% by 2035. Adding the option of autonomous vehicles, the capacity utilization of which could be 10 times higher than that for personally owned cars. Oil demand could decline 30 million barrels per day by 2035. I wonder if the oil industry is aware of this. Global auto sales may have peaked in 2017. In 2017, Ark predicted that human-driven ride-hail and autonomous taxis would reduce overall auto sales by around 24 million vehicles relative to consensus expectations for 2025. Since 2017, auto sales have declined more than we predicted, largely because of the supply chain crisis associated with the plague. Autonomous vehicles should have higher utilization rates than human-driven cars, lowering the number of vehicles on roads despite higher numbers of passengers and per capita miles. Now, hopefully everyone following along understands. A personally owned vehicle spends most of its time parked in a garage. An autonomous robotaxi is likely to spend less of its time parked and more of its time actually moving people from point A to point B. Overall, this will reduce the need for vehicles on Earth. As autonomous taxis begin to dominate urban transit, Ark now expects unit volumes to be around 26 million and around 29 million units lower than today's consensus expectations for 2025 and 2027 respectively. Consensus estimates a little over 90 million. Ark's 2017 estimate, call it 85 million. Ark's 2022 estimate, a huge change, not even 65 million. Now, I have no idea which way things will go here. Obviously, higher utilization means lower demand for vehicles, less vehicles. However, if many more miles are being traveled, this may actually have the opposite effect. Even though each vehicle is doing a lot more miles per year, if the number of miles of transit, all humans on Earth, massively increases, this could actually still create the potential for a larger global automotive market, at least for a number of years, until the roads are absolutely covered in autonomous robotaxis. Hard to know which way this goes, but it's worth being mindful. Ark are right, global auto sales may have peaked in 2017. I can tell you, they absolutely have peaked in the medium term. We're going to see ICE vehicle sales collapse as EV sales start to ramp up. EVs won't ramp up as fast as the collapse in ICE vehicles, and there's going to be a huge temporary trough in global automotive sales. Autonomous taxis could eliminate around 60% of short-haul airline flights. I wonder if the airline industry is expecting this. Spoiler alert, they're not. With prices ranging from $4 to 25 cents per mile, robotaxis could be a more attractive option than around 60% of short-haul airline flights, based on time and cost savings, including transport to and from airports. Short-haul flights at risk currently generate around $100 billion, or 20% of all airline revenues globally. I think there may be some people who have a hard time imagining that this could happen, but to give a personal example, as I mentioned earlier, I value my time to the point where I'd rather spend thousands of dollars bringing people to me than spend a small amount of time going to them. A 1 hour flight, when you factor in time getting to and from an airport plus waiting, could actually end up taking 4, 5, 6 plus hours of your day. I'm absolutely dying for autonomous robotaxis. Unlike a flight and an airport, and the taxi or Uber to and from the airport, where I can't record and edit a video. Imagine how obnoxious that would be if I'm recording a video in the middle of a fucking airplane or an airport. So this is dead time. Maybe I could listen to an audiobook. But if I could organize an autonomous robotaxi that instead of taking a 1 hour flight would be a 5 hour drive, but in that 5 hours, I have the thing to myself, I don't need to concentrate on the road, I can record, edit, create content, etc. I will be all over that. I don't even care how much it costs, because for me, money, I can make more of that. It's replaceable. Time is not. And if I can turn dead time into productive time, sign me the f up. I would much rather a 5 hour drive in an autonomous vehicle where I can get stuff done than a 1 hour flight and another 4 hours getting to and from plus waiting at airports. Same amount of time, except I have 5 hours I can use versus 5 hours I can't. Priced at 50 cents per mile, a robotaxi service would be less expensive than more than half of short-haul airline flights. So even for those who aren't interested in time so much as money, if you're paying 50 cents per mile in an autonomous robotaxi, that's actually going to be cheaper than half of short-haul flights. Pretty amazing. And the scary thing here, at 25 cents per mile, robotaxi services could be more cost-effective than 95% of short-haul journeys. The cost and time advantages should be more dramatic for group travel. An autonomous taxi for 2 to 3 people could be a better option than 75% to 84% of short-haul airline flights. Should we tell the airline industry? Should we let them know? Nah. Autonomous taxis could generate $4 trillion in revenue in 2027. By the way, it's 2023 already. Just saying. Ark have estimates here for autonomous platform providers, revenue, earnings, and enterprise value 2027 and 2030. 2027 revenue, $4 trillion. 2030 revenue, $9 trillion. Enterprise value over on the right here is pretty fascinating. We've got a $14 trillion opportunity here in 2027. Scaling to a $28 trillion opportunity, doubling between 2027 and 2030. I don't think most investors, in fact, I think very few investors, if any at all, are even close to these numbers. It just seems nonsensical. It just seems ludicrous. $28 trillion in enterprise value by 2030, 7 years from now, and 4 years from now, $14 trillion. Remember, as I record this today, Tesla's about $500 billion, the whole company. And it is in pole position to take advantage of this $14 and then $28 trillion market opportunity. Now, you may argue Ark have no idea what they're talking about, they're insane, they're deluded, and that's totally fine. However, you want to make sure that you've stress tested their scenarios, you've sanity checked them, you've debunked them, because even if Ark's off by a factor of 2, 3, or 4, this opportunity is absurd. To illustrate just how absurd, hypothetically, just imagine a single company captures just 20% of this gigantic $28 trillion opportunity. That would be a $5.6 trillion market cap just based on this 20% share of the autonomy opportunity at the end of the decade. Again, for context, Tesla today, $500 billion. 20% of this opportunity alone in 2030, $5.6 trillion. Don't sleep on autonomy. And finally, autonomous platform providers could dominate the enterprise value generated by autonomous mobility in 2027. Current enterprise value, ride-hail and autonomous startups, $130 billion, which is less than half what it was last year. Automakers, $2.7 trillion, down from $4.1 trillion last year. And car rental companies, shout out to Hertz, $93 billion, down from $100 billion. 4 years later, 2027, enterprise value estimates. Autonomous platform provider, $14.1 trillion. 5-year CAGR, compound annual growth rate, 137%, more than doubling every single year out till 2027. Ark also sees a decline in the total enterprise value of automotive manufacturers, 7% decline, and fleet owners on the right here, a fairly insignificant spec at just $300 billion. Now, I understand these numbers sound absolutely insane to just about everybody watching, but many things that previously, before they'd taken place, sounded insane have now become mundane. Don't dismiss what Arks say. Try to prove or disprove. Think through these issues. Do your own numbers and draw your own conclusions, as I've done in my Tesla valuation model. The thing that produces my absurd looking Tesla price targets. Absurd until they're not. In case you haven't noticed, the last 6 or 12 months have seen stunning, unimaginable breakthroughs in the capabilities of artificial intelligence. And yeah, cars that drive themselves, that's also artificial intelligence. DALL-E's AI, ChatGPT is AI, and so is Tesla's FSD. There's a reason Elon Musk has been reiterating and hinting over and over and over that Tesla is one of the world leaders in real-world AI. Everyone seems to be asleep on this apart from a few autistic Tesla nerds. Sleeping on this opportunity, to me, seems to be a mistake. But hey, what would I know? I'm just some autistic Tesla nerd. Just a heads up to my Patreon supporters, dropped a 20+ minute exclusive video today, one of Tesla's so-called competitors, heaping praise on the company, and also dropping enough hints that I'm almost certain they're currently working with Munro & Associates, which is a very good sign. And no, it ain't GM. And don't forget to take advantage of the great offer from Athletic Greens AG1, 1 free year supply of vitamin D3 plus K2. I take this every day, swear by it, have been doing so now for almost 2 years. It's massively improved my energy. Athletic Greens AG1 is absolutely packed full of minerals, nutrients, probiotics, prebiotics, and adaptogens to have you feeling and performing your best, including 75 high-quality vitamins, minerals, and whole food source nutrients. It promotes gut health, supports immunity, and boosts energy, and I do speak from experience, especially in terms of energy. There's a 90-day money-back guarantee, so you've got nothing to lose and a lot to gain. You can take advantage of your offer with the link in the pinned comment, or head to athleticgreens.com/SMR, get your 1 year free supply of vitamin D3 and K2. Drop me a DM in a few weeks to tell me how much better you're feeling. Head to athleticgreens.com/SMR. Love ya.